Hello everyone, this is Mohan from Mohan Trading. Today's video, I'll be giving you one of my favorite and one of my personal setups that I use. So this one is very simple, very basic, and very easy to learn, yet it's very effective and profitable. I want you guys to just go and watch all of the videos in my channel because I really don't upload anything. I don't upload videos just to upload and make money off YouTube. I don't make money off YouTube. I just want to make people learn the easy way because I learned the hard way. I spent a lot of time. I wasted lots of time and it was so hard for me. I watched a lot of YouTube channels. I spent like 20 hours, 40 hours in one channel, then finding out that I had nothing in return. I didn't learn anything. So that's all a waste of time. So in this channel, I just want to give you literally what I learned, just what you need to learn. Okay, so when it comes to the daily routine, that's what we need to do every day and before entering any trade. So basically, you go to your favorite pairs. Let's say, oh, I have those 4x pairs and I have those two. So I'll go one by one. So for example, now I'm at the USD CAD, for example. Now, okay, now what I will do is I'll just go very easy. I'll have my trend line. I'll mark all swing highs and swing lows. So what is a swing high? Swing high is at least 3 candles. It can be 3 candles, but we like it's better to have more candles here and more candles in here to the right and the left. But this is the basic definition of a swing high. So swing high is a candle, one candle between two candles, where the high of the candle is higher than the highs of the two candles. We see we have a high here, and then a higher high, and then a lower high. So as soon as this high of the candle is higher than those two candles, that's a swing high. On the other hand, a swing low is where the low of the candle is lower than the candles in between, or the lows of the candles in between. So you see this low is lower than this and this. So those are swing highs and swing lows. So we will be looking for those swing high and swing lows. So if we come here, now you would be somewhere like anywhere in here and you won't see the present. So let's forget about this for now. So for example, we have this swing high right here. Then we have this swing high right here. This one. And then we have swing low here, swing low here, swing high here, swing high here, swing high, swing high, swing low, all of those. And you can notice that most of the times when price takes a swing low, for example, here, you see how price goes immediately up instead of as other people or what we learned before is when we have a breakout, that means, oh, we're going to go down. But now price comes down to take the liquidity from this 4-hour swing and then goes up again. Another example is, let's say we have right here, see this one, the price here goes up, takes this low, then goes up right here. Now we have another example. Let's say, well, right here, this example, we have this swing high. This is a major swing high. When you're here, you're only watching this swing high and this swing low. And you're gonna mark both of them. So now price goes up, you mark this swing high, you mark this swing low. Now price goes down, takes this swing low, and then goes up to here, and then goes down. Maybe this is a losing trade, I don't know. But at least you could get some like 2 or 3 hour maybe. But then price goes up to here and then comes down very hard. You see just a wick, just sweep the liquidity with the wick, and then goes down. Takes the high again, and it goes down all the way here. So this is the very, and you can see here too. You have this swing high, price comes here, takes the liquidity, goes down here with the retracement. That's in the lower time frame. You could get some good trade right here. Okay, so for now we have this setup. That's the setup you need to focus on. So I made everything easy for you guys, and I'll have this on my Twitter. I'll have a full handout that has all of the information that you need, and I'll have some examples there, more examples than on YouTube. So basically, what we need to see: price goes up, makes a swing high, goes down. So now after going down here, this is our swing high. Price goes down, goes up again, takes this high just by few candles or a wick, and then goes down immediately to the range that we had before, or just below this swing high. So we have a 4-hour liquidity sweep, then it goes down. So in this movement right here, so now we are in the 4 hours here, but then we go to the 15 minutes, we can see this happening here. So we have the 4-hour sweep here. So this is on the 15 minutes. This was our 4-hour high, but in the 15 minutes. Then we had a sweep to the upside. Price goes down. Where's the last low before this sweep? Is this one? This 15 minutes change of character. This is the last low before breaking or before the liquidity sweep. Price goes down. We wait for a change of character. If you don't know those terms, you need to watch the other videos. That's going to teach you what change of character is. Basically, we need to wait for a change of character, which happens here, right here. Then after that, same on the 15 minutes or in the 5 minutes, we're going to look for a fair value gap or a 15 minutes or a 5 minutes order block. Enter from there. You see here. So we have this short opportunity. So we enter from this fair value gap. We're going to have our stop loss just above this swing high. This one right here is same as this one. And then we're going to target the liquidity, which is right here and right here. But make sure you take some partials on the first level, especially if you are trading against the trend. So let's say it was trending the upside, and then you have sweep of liquidity to the upside. Now you need to take partials as soon as possible, and not wait all the way here, because maybe sometimes it's gonna go up, and this is gonna be a breakout structure. But if you are with a trend, maybe you can hold to your last target. So this is our model, and we're gonna enter right here. So on the 4 hours, it's gonna seem like this. Gonna enter here, stop loss just above here, and then targeting right here. So this is what it looks on the 4 hour. Let's dive into some examples right now. So this is the US dollar and the Japanese yen on the 4 hours. This is a trade that I took yesterday and I shared with my friends, one of my friends. So basically, even though we are trending to the upside, you see we started to go to the upside, but the overall trend is downside. But we can enter trades on both sides. So basically, I saw this swing high here. I mark it up, and then price goes down. And when price was here, I was waiting for this sweep of liquidity. So I didn't see this, and I was waiting for it. And then it happens. So we see a liquidity sweep. Now I will just use the replay, but just for the sake of learning. So we are here. Now price takes, see, the price takes this right here, sweep the liquidity of the 4-hour swing. Now what I will do is go to the 15 minutes. So I'm going to go to the 15 minutes, see how price takes the liquidity, goes down. Now what do we have? See if we have something in 5 minutes, something interesting. So basically, on the 5 minutes, we have this fair value gap, first of all, we need to see change of character right here. The 5 minutes, you see this change of character right here. After change of character, we need to look for fair value gap or order block in this area. For me, so we had a fair value gap here that was partially filled, so I'm not interested. We have this fair value gap that was not filled. So I'll go with this one, fair value gap. So overall, you're gonna learn which fair value gap to pick and which one is not to pick. So fair for me, this one is a very valid fair value gap. So what I will do is maybe I'll enter. I don't remember exactly where I entered, but say here I think at the beginning of the and then stop loss. I went aggressive here, and I had my stop loss just above this because I said if not this fair value gap will hold, maybe this order block will hold. So, and I went was somewhere in here. Was this low? Yeah, it's only 3 to 1. I could go to those equal lows after that. See, so this is my last target for me, and it's gonna be 6 to 1. But for now, it was only this. It was only 3 to 1, which is good, which is decent. So let's see what price do. I mean, I know what price is gonna do. So you see, price goes to the fair value gap, then bounce up. We are in the trade now. So I'll go to the 15 minutes just to faster. Then it goes down, enter it again on the same fair value gap, another entry. Okay, and then finally taking profit. So that was a 3 to 1 that I entered yesterday. And this example is very clear. You see how it's very easy. You only look for those swing highs. After that, you look for 15 minutes or 5 minutes change of character, 15 minutes or 5 minutes FVG or B. That's it. So this is the second example. This pair especially gives me a lot of opportunities, a lot of 4 hour liquidity sweep. So this one for me is one of the best pairs for this strategy, the USD CAD. So we have this swing high, and then we have this swing low, or this one is already taken. We need some fresh zones. So this one right here and this one. So those are my zones now. Then price. So okay. So basically price takes this high right here. Now going to the 15 minutes, we need to see is now price takes the liquidity, goes down. So now some people, it depends on your personality. If you're aggressive, you're gonna take a change of character from here. Because I believe this is on the 5 minutes, this is a change of character. Since we are dealing with 15s and 5 minutes. So you see here, this one is a change of character. So change of character right here. Now going back to the 15 minutes, looking for a fair value gap, we can see this order block with a fair value gap. You can enter on the order block, but I really got used to entering on the fair value gap. And since there's a really clear order block that takes liquidity, so maybe I'll have my, because I don't want to miss the entries. Because sometimes price goes to the fair value gap, now reaching the order block and then reversing very sharply. So I'll make sure I enter on the 50% of the fair value gap. So let's say here. Then where do we target? So first target is this liquidity right here, lots of fix, even though it takes some here, but I'm still sure like this one has a lot of liquidity. So maybe this is my first level. Then we have, let's see. If I go to the 15, okay, that's if I go to the 5 minutes, what do I see? Right here, that's like double bottom. So those are my two The first one is right here with a 5 to 1, and the other one is 6 to 1. And then, oh no, so stop loss just above this high. So that's okay. So this one is almost 5 to 1. Going to the 15 minutes, and then we'll see what happens. Price doesn't touch our, okay, price goes down, doesn't touch our entry, and then okay, we are in, and then oh, immediately. Okay, so we are in here, but price goes a little bit more to mitigate this order block. See right here, order block exactly mitigates this order block, goes down. So if you entered from this order block, would be 8 instead of, so almost the double. So if you enter from the order block, it's gonna be 8 to 1. You enter from 50% of the fair value gap is gonna be 4. That's almost double. But keep in mind that sometimes if you just look for order block, you're gonna miss the entry. But sometimes price just goes to the fair value gap and reverse from there. Make sure if you guys want to see some more examples and more live examples too, you can follow me on Twitter, and I'll also have a handout that I made for you that has all of the information about this model or setup. You're gonna like it for sure. Thank you so much for watching. I hope you guys succeed in this trading journey. I wish you the best. And you guys make sure you like and subscribe to the channel. Thank you so much. Happy trading.